Hey, what's going on, guys? It's going to be the trade recap for April the 16th. Today is a Thursday. So today's trade actually on SPY that I had, we didn't place any money on the trade, but all our confluences played out. Oh, they're all on the screen. I forgot. Yeah, this is linked to my laptop, and my laptop already had all this pre-programmed on it. So now that I don't have to go through the hassle of marking everything out for you guys, I'll just break down step by step what I saw. There's some that's deleted in here, but we'll go more in depth. Alright, coming into market open is just steady all around throughout pre-market. There wasn't any major like 1 hour movements during pre-market or any major 30-minute, 15-minute movements. So I was kind of chill off that. There was nothing I could do going from pre-market to market open. But when we did get to market open, one thing that I saw was a big run down to the downside. And throughout the downside, what we ended up forming was we formed a fair value gap on the 5-minute. I'll mark it out in blue. There we go. Stretch it down there. Oh yeah. So that is a 5-minute fair value gap that we had. I don't think there was a 15-minute fair value gap. No. Originally I thought it was going to be a 15-minute fair value gap, but what ended up happening was that 15-minute candle came up and then it got to even with this candle right here, so no fair value gap. But we got the 5-minute fair value gap. So my original bias today was down to these lows, all the way down here. Only because this is the first time I've seen SPY in the $700 range, and I knew I'll have all that volatility. You almost gotta expect, why would it push up any further? What levels could it take out? It's more likely to take out these levels down here. If we're thinking like a market maker and a market mover, we're thinking to the downside. We want to target all those draws on liquidity. So we come in and we break structure on these lows, these 30-minute lows. Right, so we break structure right here on these 30-minute lows. And since we broke structure right there, well, we broke structure on the first one, didn't break structure on the second one. Well, this candle broke structure. Let's get into this, right? So we broke structure here, we broke structure here. My immediate thought process is, alright, we're going to come in, and if we break these structures right here and we move further down, then we would look for all this right here. But that broke on 30-minute time frame, and within 30-minute time frame, this purple box that I have marked out was a 30-minute fair value gap. That was a 30-minute fair value gap in that candle. So now my original bias is like, alright, well, we could look for a higher retracement up to fill the downside. But originally I was like, as a market maker, I was thinking like a market maker, I wouldn't want to price to retrace all the way up here just for us to potentially get equal lows and then come back up and just be in volatile price range. So what I did was I waited for my confluences to line up. So I saw that in this we also have another 5-minute fair value gap that we could look to get respected. This one right here. What ends up happening? We fully rush up and we invalidate this. So first we didn't break structure right here. Then we moved down further down. As well as, this was a perfect opportunity for an equilibrium from that high down to that low. We come in and we fill equilibrium, and eventually I thought we were going to start moving out. But in that case we didn't. We ended up making a high right here. And we didn't break structure on this to move down any further. If we had moved down any further, I would have waited for us to break structure right here, maybe rebound off this price range, fill an equilibrium, or fill an equilibrium beforehand, and then we could look to target these lows down there. But what ended up happening was we inversed this, and then after we inversed it, we had the 3 candle spread, and I waited for an equilibrium retracement. We didn't have the equilibrium retracement. It didn't come in, it didn't tap equilibrium, but what it did tap into was a 5-minute fair value gap. Now I want to play this very clearly. 1, relative equal lows, that's our change of trend. Then we have the inverse fair value gap. That means we're going in the opposite direction. Opposite direction is confirmed. We're going to go in the opposite direction. We invalid price range to the downside. Third, we have the retracement into the 5-minute fair value gap. That is one of our other confirmation confluences that we're going to move another higher. And now we need one more confirmation confluence, and that one was on the 1 minute. If I can find it, if it's still marked here, I can show you guys. Oh yeah, right there. We had equilibrium grab, or not equilibrium grab, sorry. We had retracement into 1 minute fair value gap. Right, we retrace into 1 minute fair value gap. Or the thing with like 1 minute candles, I just find this as any form of retracement. And then that was our three confluences confirming that we're going to change trend to the upside. And the reason why I wanted to take out this level right here is because it was a significant 1 hour high. See, very significant 1 hour high. So that was the level that I was really hoping to take out. Originally my bias was to the downside, but as you can see, the full trade to the upside fully worked out. And the reason why I wanted to set this right here as a take profit and this as a take profit is because this is right in that 30-minute fair value gap. It's right in that 30-minute fair value gap, and we could have potentially came all the way up here and then fully retraced a lot lower, right? So that's why I set these up here, because I knew if we were going to inverse this is only a couple ticks away for us to easily target. So our trade today, mainly it was an original bearish bias, but we were able to make profits on bullish structure. It was a really simple trade. Unfortunately, the only reason why I did not play this trade with real money is because over here I originally missed my entry, and my thought process was like, alright, if I miss my entry and then I'm also skewed on which direction we're going to trade into, because we have a lot of wicks to either direction, we could really reverse this in either or. It's better to just use a prediction trade. Like I said, we want to be able to test our market structure, we want to be able to test our strategy without having to risk high volatility movement. So yeah, we made a fair bit of profit on this one. We would have made a good bit of profit, but it's honestly good that we can take a break from the charts on days like this, and we can just target these ranges without having to risk any capital, and instead just fully rely on our strategy and our psychology with it. Secondly, that I want to go into is that this is actually the second trade of the week. Now, with the second trade of the week, we don't have to take every trade that we take 100%. You guys know this word for word. I always say it constantly. We're not going to take 100% of the trades if we're not confident in them, because we could have very well like even waited for a retracement down into this fair value gap and bought in right there and still ended up targeting those highs. Alright, that's what I want to go into. This trade was a pretty good trade. That's about it. Alright, thank you guys. Peace and love always. I hope you guys enjoyed this video. It was a nice short one, and we'll see what tomorrow's trade brings.